Good morning, everyone. Already Wednesday, hump day, first week of September. Back to school, back to work. Northern hemisphere, at least. I was making fun of my buddy Fernando in Brazil going skiing. Saying, why are you skiing in the summer? It's funny. I know, very funny. Lots of interesting data coming out. I'm trying to parse it all together. I'm trying to get some complete pictures of a lot of this global monetary data. As we're leaking pretty high in valuations in a lot of markets, gold, stock market, bond markets in most markets, except for the US, have pretty low bond yields, which means high prices. And then, of course, we have Bitcoin, which is right on trend. So I'm trying to, just continue to get some interesting data metrics together. I think really with the overall goal of trying to educate that we are just still, in my opinion, early. We're not super early. We're not early adopter early, right? Bitcoin is now a mainstream Wall Street asset with ETF flows. But we're still very, very early as far as what Bitcoin is going to do to help the monetary system. So, and having said that, I actually have one correction, or you're going to see it on Marty Bent's podcast, because I did an interview with him yesterday. I'm not sure when it's going to air, but it's not really a big deal. But let me pull it up. This is my old sort of headline chart. And for some reason, when I pulled it up with Marty, I have no idea why. It was maybe missing like central bank gold or something. It was a little bit lower than this. It was 44. Sorry, when I was talking about it, it was like 40 trillion. It seems like maybe it wasn't pulling central bank gold. I have no idea why, because this one's actually automated. So I'll probably have to address that. That's the problem with putting out numbers and then you get a chart that doesn't show up correctly. Whatever. Doesn't matter. It happens. This remains the sort of headline trajectory, as far as I can tell, of how the TradFi system is going. That's fiat-based money plus silver plus gold. Right. Something like 45 trillion put on Bitcoin. $2.3 trillion. What's that percentage terms? 5.1%. Talked a lot about this idea with Marty. If Bitcoin will turn into an exponential asset, that means if it'll turn into a straight line on log scale, or if Bitcoin will make the exponential world turn power. Jury is still out for me on that. The problem with Bitcoin turning everything in the world sort of into power growth is you can't calculate interest rates that way. Interest rates are by definition exponentially growing. Compound growth, geometric growth. So you just can't, you can't calculate typical interest. And that, of course, lines up with an idea which has been around a long time, right? You just have a fixed amount of Satoshis. Even if you want to put paper Satoshis on there, you could, but then the idea is who's going to want that if they already know that those Satoshis are going to continue to be more and more scarce, more and more valuable. The only way you can actually stack on that paper interest is A, if the system sort of agrees to do that, which it might, or B, there's sort of a monopolistic compelling to do so. And that seems actually fairly likely to me. The states will continue to demand to use their currencies. And when you have exponentially growing currencies, you'll have exponentially growing credit markets. So, but this is still a long way out. All right, what that idea that I'm talking about is way out here. In my opinion, 20 years, 30 years, at least, until we start to understand what's happening. But just to be clear, all of TradFi grows like this. It doesn't matter if it's stocks, bonds, whatever, gold. It will grow in a straight line on log scale. So keep in mind, it's not much of a difference, but I think it was projecting out when I was interviewing with Marty somewhere here at like 120 trillion. I have no idea why, but this 2043 number is still what I'm hovering around for a while. So that is that. Wanted to look at the way returns grow in Bitcoin again. So again, we have a long time. And actually, trailing 12 months is better. So there's two different charts. They're very related, but I've shown them in different ways. This one I got going out to 2167. Let's zoom in. I've shown this before, but all right, so the same old power curve, 96% R squared. People get nervous. Don't get nervous. 110K, 111K right now. We're still 1K below the trend, but that's all right. If you look at this trend line versus the actual price, all right, we can start to understand where Bitcoin has been percentage-wise, okay? But we have to look at two different things. So the first thing is this capped at 2,000%, because this is now trailing 12 months. All right, so you can't see it, but if you look in the tooltip here, when we're way above, you'd have tens of thousands of percent, hundreds of thousands of percent return if you bought on a trailing 12-month basis, say May 2011 versus May 2012. Or sorry, this is May 2011 versus May 2010, a year before. Okay. This trailing 12-month growth declines. Everybody knows it declines. Bitcoin becomes more stable. It becomes less volatile, as I showed yesterday. The volatility drops. The peaks of the tops drop. People talk about that a lot. All right, now we're on this very interesting, smooth sort of growth, which is still pretty large year on year. Hundreds of percent. I'm not showing negatives, by the way. As you see, here's negatives. It certainly can go negative as far as trailing 12-month return. But right now, we're at a 93% return year on year for the price. Okay, so pretty incredible, right? $110,000 Bitcoin is 93% higher than it was a year ago. If you want to talk about topping, I still don't believe that this is the top based on the trend. It's a separate analysis. That's not what I'm trying to explain here, but obviously, let's just do some basic math on the top. we got to something like, yeah, 2000 plus. This doesn't, the top was, I think, December 16th. So well over 2000. Let's just zoom in and find it for you. There it is. 2,400% in December 2017. Okay. On a trailing 12-month top, 2,400%. Let's find the top here. Let's find it exactly. 1,064. So basically 2.4x higher, or let's do percentages, be cheeky about it. Minus 1. So 55% lower, or a 55% discount, you can say, or basically 45% of the 45% of the prior top. That's the number, okay? A little bit less than half, to be fully precise, okay? So if that number holds, and this is a very basic number, right? So we got 1064 times 45%, 500, yeah, it's 478. So let's assume, again, and this is, I know this is very simple math, but let's assume that we could get up to 500% year on year. That's one idea of a top. These things don't have to be linear, though, so this could scale down because obviously it's power growth. So, you know, maybe it's 100, 200%. Again, I'm not running the math on this idea. 100% we have. All right, so this is an idea if it is a top, but based on where the price typically goes around the curve, I certainly think it's going to get multiples higher, as I've talked about many times. Okay, so let's just stick, you know, to what I've been saying. 125K on the curve at year end, 2 to 3x. That's 250 to 375. Okay, whatever that is on a year-on-year basis would be something like probably 200 to 300%. Okay, assuming a year before that the price was 100K or lower. Okay, so this very, very simple math. So 200 to 300% on a year-on-year basis. Okay, you understand what I'm saying, hopefully. So we see that, you know, the blow-off tops are lower highs, right, from each time that we have a cycle, and also the lows are what's the word? Is it in percentage terms a higher low? I don't know. It's less of a low, less of a drop, although not by much, to be honest. This is again another thing why I say don't fix what's not broken, and I could totally see a major bear in a year. We don't have to do this analysis, right? Going through all the bears, but you know, 60, 70, 80% drops. Maybe it's only 50% drop. Who knows? I could totally see that happening. The point is, let's smooth out all these green lines now and show you what's happening with Bitcoin and try to talk about the market in general. Okay, so I'm gonna smooth them out. There we go. I'm just running on the curve, and I'm going to take off the price changes. All right, so a very smooth now estimation of what the returns have been. Obviously, you'd be doubling in a few days here at the very, very beginning, then months, years, and now we're at the point where a trailing 12-month, there's our 43%. That's a doubling every 2 years. Okay. Where is this number going to meet with TradFi? 2070 is that 10% number? Okay. Just leave it. Okay, so again, here, I see no reason to think that this would be any different than it's modeled. But if TradFi is giving you 10%, and by the way, it's going to get, the S&P 500 is already 11% right now. Since 2008, the trend with dividends, it's 13%. So I see no reason to wait until 2070 to cross, right? For these ideas to cross, these returns, the profile will probably cross much closer to now. Let's even look at that 2040, 2043 number. Here we had 20% return. Okay. So this is where the tension will come in the two different models of Bitcoin, basically. If Bitcoin is just mirroring the financial system, and the financial system keeps growing and exponentially, and we have lots of KYC and fiat interest, then yeah, maybe Bitcoin will turn exponential here, and then it will just start growing like the financial system. But I think that is less exciting from a cypherpunk thing. It would be pretty amazing if those that had Bitcoin could invest in some decentralized way. Maybe it's equity-based financing that gets talked about a lot, or maybe it's some creative way of debt financing, which I haven't thought about. I mean, you can do simple interest. That's a simple idea, but simple interest doesn't compound, and your net compound return would fall over time. If you just got simple interest, like say, here's your loan, give me 10% simple interest. As time goes on, that 10% on a compounding basis will fall gradually, kind of like this falls. So that would match up with what Bitcoin does. Or we just do full equity, then you don't have to worry about interest. But full equity is kind of complicated. I don't know the answer. I really don't. I think Bitcoin will do either way, either way, but this is, to me, this is the sort of crux of where these return profiles are going. Bitcoin still offers an enormous return compared to TradFi. But you might also ask the question, which is a good question, is if Bitcoin, if we get to say these 2040 time, we start to match the value of gold and fiat currency outstanding, and Bitcoin is returning 20% per year, and say gold and stocks, or just stocks, whatever, are returning 20% per year. And that stock and gold returns are sort of stable or increasing. They're exponentially growing, and Bitcoin's is not. It's this slowly declining return. How do you square those two things? Why would you want to hold actually Bitcoin in that case? And the answer has to do with Bitcoin being the most saleable asset, desirable asset. I have no doubt that Bitcoin will fulfill that role. But what I do doubt is how that role will be taken on in the financial system. It goes back to what I just said. It's either Bitcoin will change this structure of this slowly declining trailing 12-month returns, and it will move into the world of constant returns, which is like gold and stocks and everything else, which frankly seems like the easiest way to handle this. Or, like I said, because Bitcoin is the most saleable, desired money, very easy to use, everybody requests it, and there are these limited amounts of Satoshis, and people don't want to risk lending these Satoshis if there's literally not enough interest that can satisfy the risk of the loan, of the capital structure. in Satoshi terms, then you would need some new sort of a capital market. You would need a market that's more equity based or has some strange interest rate structure which is not geometric, which is not compounding. That's how I see it, basically. I certainly don't see it where Bitcoin continues on this power curve and then Bitcoin continues on this power curve. It starts to go down to like 16, 17% gains in this, old fiat currency terms. But then other stuff like stocks, bonds, whatever, continues on this super exponential growth that Jeffrey West talks about, and we're, up to 25, 30% per year or whatever. Another possibility is Bitcoin answers the question of this mathematical singularity. It's just like Bitcoin takes us completely out of the realm of needing to jump to a faster and faster treadmill. And Bitcoin itself is this sort of new numeraire base money that everybody understands is the best way to hold wealth. And we move to that. But again, I hasten to say, if we do move to that, I find it very difficult to envision how fiat interest works. Compound interest. Compound interest can work very easily if you're still in a fiat system and there's dollars and euros and yen and yuan and crappy Russian rubles. Bitcoin can very easily mirror that system and maybe even turn exponential. I would say even would have to turn exponential to match those interest returns. So my point of all this is I really think it's interesting that the numbers can sort of tell us a story of where this stuff actually changes. All right, so let me put another chart for you. Of course, as always, I got to go back to the basics here. Here's base money and the trend line from fiat central banks. Okay, so this is part of this chart that I showed you before. It's part of this green line. It doesn't include gold. It's just fiat-based money. Massively strong trend line, 99% R squared, exponential growth, straight line on log scale. I'm showing you sort of two extremes. Something like a 2 sigma, basically. You need a 2 sigma move to get outside of this line. Oh, look, we're outside of this line to the bottom. Extremely rare compared to the trend where we are. All right. And just so you can see the trends move in the past. So in the past, we were in the band. Don't worry about this. In the past, we were in the band. You can form new lows for sure, like we did here in the 80s. But we're way low compared to everything that was done here in this period. Anyway, I see it coming faster and faster again. The overall trend line is too strong. So, and I need to actually extend this out just to show you, but the trend here by 2033 is 80 trillion dollars worth of base money. That will easily continue to, a couple hundred trillion. They're not going to change that. This is why I'm, as they call an inflationist. I'm not a deflationist like the old Robert Prechter types. It's clear that generally the solution of the system is to inflate the money supply, not to deflate or keep the money supply at some stable rate. They simply inflate. So that's what they'll do. That's what they'll do. So when you put two and two together, you look at this, you see that we cross here, 2043 or earlier, right? Could be 120 trillion, 100 trillion, could be within the next 10 years that we cross in value. And then you line it up with this stat where the trailing 12 months of the regression for Bitcoin in the year 2035 is good here, but this could easily be matched by a heavily inflated global stock market. They could easily have these types of returns. So net just comes back to everything we've been talking about. Bitcoin, I think, wins in all scenarios, but in the next 10 to 15 years, we're really going to see what Bitcoin can do and how it's going to transform the global financial system. That's my timeline. 10 to 15 years, I think even this 2043 number's too late. And when we meet at 155 trillion. These are trend lines. Trading is fine. As I said, I'm not a trend line. I'm not a technicals guy. I'm just a trend line guy. So, to each their own. Never financial advice, but this is where I think the price will eventually go. We'll pull up the every 10th as usual. Because people continue to get worried. All right, so here we are. Sorry. The 0th, the 100th, probably never going to happen again. So we got this rainbow. This is where we go. All right. 4-year cycle remains, in my view, pretty strong. Like, I'm very convinced still that the 4-year cycle remains. So here's where I say again, getting up to that 9 has happened every time. I think it can easily happen again. That's 2x or 3x the trend by the end of the year. And I would probably be willing to say, I think anybody should be willing to say that the cycle is over if we don't hit the 9 for sure, and maybe even the 8 this time. Because look, have we hit the 8th yet? No. Kind of close here. In the number 8, 80th percentile. Kind of close when we were at 104K back in December. All right, but now farther and farther away. But still close to the trend. Still close to the trend. So I just don't see the risk yet of falling into a bear. Here, let's see, no, not here, here. Here's been some level of support. 50th percentile, which is 0.8x the trend. And we're well above that right now. It would be back to 86K at the moment. So as long as we stay in this band I would say it's probably even nothing to worry about. And again, I don't use that as a technical trader. I just use it as this is what has happened in the history of Bitcoin. So these are all bullish things, in my opinion, and reasons to stay confident. A comment talking about begging your dad when it hit 18K in the crash. Yes, I understand very well. This was the old Peter Zion moment. The soothsayer of geopolitics, saying that Bitcoin was $17,000 overvalued when it was $16,000 on his Joe Rogan appearance. Terrible. And clear bottoming area. There's the 10th percentile and the 20th. It was like 15th percentile. Something like that. Extremely low. These are screaming buys. Screaming buys when it gets to these points. And likewise, I mean, again, here, if you want to talk about revolving out of Bitcoin or trading a little bit, it's probably a scream and sell when you get to over 90th percentile. But again, I hasten to say, because I'm not trying to force people to trade here. I mean, it would be very sad if somehow, I don't know, maybe it goes close to the 8. Someone sells or you lighten up and then you think you're going to be able to buy back cheaper. And then it just stays somehow in a tighter band as we go into the future between, say, the 8 and the 5th here. That would obviously be a bummer. All right, this in my mind would be Bitcoin staying on a significant, healthy, stable uptrend. I don't see it yet. I see what we've seen here is, tons of UTXOs from 2011, 2012 have been unloaded here at these prices. And that's what's keeping the price from springing higher like it did in these higher bubbles or higher booms. Everything else will be worthless too. Your bank account. Yeah, it's possible. Gold seems like it's definitely tearing. Good evening, Dominic, or good morning. So the Bitcoin CAGR, yeah, I do have this chart, by the way. So this is a little bit different than here. So this is trailing 12. This is like if you bought Bitcoin at any moment on the curve. But if you bought it now or bought it in the past and held it until now, that's a different chart. Okay, so that's this chart. So here's the noise. It's too much noise as you get closer to today. But if you smooth it, this is a nice smooth chart as well. Notice it'll be very close to our 43%, but slightly different. This is if you bought Bitcoin on the black line at any time in the past and then held it till today, you'd have 156% return compounded. All right, we're at our 42% now. Going out into the future, this is higher. So this is another interest. This is actually does cloud the picture a little bit from what I was saying before. So here's 12 months. Notice how it's very steep here, trailing 12 months and then shallows out. Here's CAGR. So if we go out to 2070, this is kind of an interesting delta, right? Remember what our trailing 12 month of the power curve said in 2070? It said 10%. But actually, if you bought Bitcoin today, right, at the trend price, say 110K, and you held it until 2070, $210 million valuation. I understand we'll be on a SAT standard by then. But the curve would project an 18.7% CAGR for you if you held it until 2070. 18.3 actually. That's a subtle difference. But that just is what it is. That's what the numbers show. Meme coins are leveraged Bitcoins for sure. They'll always pump. They could also dump a lot harder. They do dump a lot harder than Bitcoin, but yeah, definitely go for it if you're into it. I don't know who Perry Caravello is, but yeah, I'm not chilling. I'm not chilling here on this channel. Yeah. So this is interesting, right? It's a literal, you know, this is like your YTM, right? In a bond yield. This is your bond yield calculation of buying Bitcoin. Okay, so anybody who's bought back here, this is a very interesting curve, but it changes every day based on the price. So if you bought, back here and held it until today, you would still have a 139% return. And yet people still dump Bitcoin, right? They've held it for too long. 100K is a psychological number. They want to get out. But you can imagine in what other market are you going to find 139% return? And that's what they still are earning every day. Now it falls. It will fall slowly as we go out in the future, right? Because this price it still grows massively, but it's relatively lower in the future than it is today. That's the idea of this chart. But yeah, you could, this is why I'm saying compound interest won't work in a Bitcoin standard. Because if we looked at the compound interest of any other market, S&P, whatever, over a trend line, it would be a straight line, straight line. But Bitcoin goes down. So they just don't jive up. That's the interesting sort of philosophical question about it. But it's still enormous returns that you get in Bitcoin for the next 10, 20 years for sure. Good morning, sir. Looking forward to talking to you soon. Don't worry about it. Next 10 years, it's 2035, 30%, 31%, which again is still a doubling every 3 years or whatever it exactly is. I'm not sure. Remember, rule of 72 here. These are compounded numbers. So this tells us, I should get a chart with doubling time, right? But this shows us Bitcoin is doubling every 2 years at the moment, 41% per year. It's a doubling every 2 years. You can. Many people have. Many people do. Many people have sold their UTXOs from 10 years ago to buy Bitcoin treasury companies. You can. It is number go up technology. That's the beautiful thing about this curve. But this chart, here's the thing. This chart does not show us what the solid black line could give us in the future. If we bought in the future, it only shows us what it would be worth if we bought today and then sold in the future. This shows us the trailing 12 months in the future. And as you can see, it's lower. So it is all the more reasons why I think we're going to face this singularity, this sort of nexus between what traditional markets return, and they're probably going to go faster and faster with all the money printing, all the debt, versus what Bitcoin returns, which it does decline. There's no doubt about it. You can't deny that the returns in Bitcoin decline over time. You just can't deny it. So again, I'm just trying to put numbers on ideas of what could happen in the future, but if we meet in value of gold and base money in 2045 or 2043, that for sure means it's on everybody's radar, and I mean like everybody's radar, 10 to 15 years before that. Well, let's say 10 to 15. Let's say 10 years before that, at least. At most. Sorry. Too early in the morning. So maybe here. And then you look at where we're going to get trailing 12-month return. Out in 2025, Bitcoin will be returning 24% per year, 25% per year. That'll be kind of the moment of truth of Bitcoin either joining the legacy financial system or Bitcoin taking the legacy financial system onto its network. It's a very interesting question. Yes. 21 million. No capital C on the Bitcoin, John. Probably everything will be faster. Faster and faster and faster. It's another reason why I say it's probably 2043 is too far away for this nexus occurring. I'll show you, by the way, of the. I need to actually show this. I need to change the this 4 trends chart so you can see exactly what I'm talking about. But here's the S&P 500 with 4 trends. Yeah, that's right. If you're talking about the currency itself, Bitcoin's all lowercase. If you're talking about the network, that's typically capitalized. You had something, Dominic. Yes. Was this saying the average will be in the next? No, there's no averages. This number is kind of like an average, but it's not really. It's your YTM, it's your IRR, it's your investment return. So if you bought Bitcoin today, all right, and even held out till only February 2030, right? And if not only, let's even make it clear. If you bought Bitcoin today, we're right close to the trend. So let's say you bought it $112,000 Bitcoin, and you only go out to even a half a year. What's going on here? My chart messed up. Yeah, if you only go out to say April 2026 or March, half a year, whatever that is, and the price is 136,000 at that point, which is perhaps likely with the power curve. Your return at that point from buying today is 40.7% annualized. Okay, so it's just a return calculator. This is more of a sort of what is the rest of the financial world doing calculator. So it's always going to match today, right? So you see it's 43%. This has to do with the annual rounding in finance, but it's basically the same. You see it's 41% because this is right day by day. Like literally right now, the CAGR of Bitcoin is returning around 41.5% per year. If you looked exactly September 2025 divided by September 2024, it would be 43%. So this is an annual number. This is sort of a daily to annualized number. That's why they're slightly different numbers. The point is, you're equal on both of these today. But then if you don't think about an investment, you just look at, okay, what's going to be the evolution of the return of Bitcoin in the future? It's this like way steeper one, this simple trailing 12-month return. In 2041, it will be 20%. I could easily see the S&P 500 returning 20% in the decade of the 2030s. So here now, let's show you the stock market. I put this in my presentation to a lot of conferences this year. Broad pictures. This is the trend of the stock market in the 1800s. 2% CAGR in the time of FDR and Truman in the United States, from the founding of the Federal Reserve, even with a huge Great Depression, which is right there. Trendline growth was 4.8%. 1971, gold standard came away until 2008, 9.6%, and then 2008 until today. We actually slid down the hill. We had to grow faster still, and we do, 11.5%. So you can see this is this Jeffrey West treadmill of super exponential growth. But what I don't have charted, and I need to chart to show you, is if I would align it with this chart of Bitcoin. Let me zoom in. All right, let this chart with Bitcoin. And I would put these percentage compound growths on a chart. How would they look? They would be just straight lines. All this period was 2% growth. And then this period was 4.8. So it's sort of an escalator. This one goes up. This one goes up to 9.6. Then this one goes up to 11.5. So the question will be, when does this cross this? Probably 2030s. I don't know if I have it alone, Dominic, with gold. Oops, let me pull this up. But we can do it together. So here's gold. Oops, that's wrong. I take that away. Maybe I took it away, actually. Market cap of gold. I need to make that, actually. Market cap of gold is 20 trillion. So it's included in here. Dominic, it's included. But it's just it's a subset. So basically, monetary base unbacked is something like 23 trillion, and then gold and silver together 21 trillion. There's your 44 trillion. And since this is, those two components are roughly half, like super rough, you can see that when do we cover, and they don't grow the same, of course. Fiat grows a little bit faster, but probably roughly here. Only 8 years, 7-8 years, Bitcoin would pass the value of gold. Actually, no, sorry. When does it get to 75? Yeah, I need to chart it, actually. Maybe late 2030s. Probably late 2030s. Too many numbers. Swimming in a lot of numbers here. Hi, John. Probably yes. And I would expect people running for the exits, but the exits are not, they're not as illiquid as you think. And let me try to show you that here. So here's the top 5 broad money supplies. And they are going to keep printing no matter what. They're just going to keep printing. Something's up with my charts. Let me refresh this. Another reason I don't put this stuff online. I have to fix things on the fly. One second. Well, I'm zoomed in. I have to zoom in on this because it's somehow after 2024, a year ago, I'm losing my data. But this is an old chart, actually. The total number now is about 100 and it's already 115 trillion. So it was 85 trillion a year ago. This is June 2024. Now, if memory serves, it's like 110 trillion. I don't have it right now. It's because of something slipping on my US data. Point being, yeah, actually a lot slipping there. I don't know what's happening, but just look at the trend here. Forget sort of the accuracy of some of these numbers because something's happening to my database, but it's just going to keep inflating. No matter what happens, they're going to print. So that's what we have to look forward to, and that's why Bitcoin will always be a good hedge. No problem, Dominic. Thank you. Hello, Logi, or Logi. I could say the Latvian. So yeah, what else do you guys want to see? Always printing more, my friend. Always printing more. I already talked about this at the head of the show, but this will be the exciting, not really exciting. I'm not a doom and gloomer from this stuff, but this is just clearly going to be gasoline on the fire because Donald Trump wants lower interest rates. They're happening. With lower interest rates becomes more money supply. We are extremely low based on the trend right now. We should have about $35 trillion in base money. We have 27. So theoretically, we're $8 trillion under trend. Pretty sure the central banks around the world will solve that in the next couple years. Maybe the next couple months. Do you have any Bitcoin exposure, John, or are you 100% gold, silver? Because we can look at Bitcoin in gold terms. Oops. And we can see that Bitcoin is cheapest on these power percentiles in gold. So where's my dollars? Finally, it's here. We're right on trend for dollars. 112K, 111K price, 112K trend line. If we looked at that for gold, all right, this is where Peter Schiff has steered his clients completely wrong. You know, it would cost you 1 ounce of gold to buy 1 Bitcoin. We had parity in 2017 at about $3,000. I think it was around $3,000 when it passed. $3,000 gold, $3,000 Bitcoin. So 1 ounce. Actually, here's 2. So it was probably like 4. Bitcoin didn't get to 5,000, I remember, till like September, October. So it's probably whatever, $4,000. Yeah, gold wasn't 3,000, of course, at the time. It was $3,500 Bitcoin here, right? We see the Bitcoin price is 2. This is in ounces, so ounces of gold. So $3,500 Bitcoin around here, $1,700 gold, or whatever it was, something like that. Point is, for less than an ounce, 2 ounces of gold, you could get 1 Bitcoin. Now it's way different. Of course, it's going to cost you 33 ounces of gold to buy 1 Bitcoin, but it's kind of on sale in terms of gold. If you only have gold and you're looking to maybe have some Bitcoin exposure, you're still looking pretty good on this chart. That is, Bitcoin is undervalued in terms of gold. It's different. It's open source software. Mortgage-backed securities were very much closed source software. That's primarily number one. Yes, they're not financial advice. But yeah, if I had gold right now, and I'm pretty much don't, got no problem with gold. I used to have gold, but if I have gold now, I would buy Bitcoin for sure. Because here, it looks very similar to this price curve, right? So here is the dollar. Gosh darn it. Here's the dollar curve. And then here's the gold curve. Looks very similar. But we are well outside of heated, ranges as far as Bitcoin in terms of gold. If we zoom in, close to the 30th percentile, which is low, which is cool. All right. Very cheap. Even though 32 ounces of gold probably seems very expensive to you, John, compared to, anything else. But look, if you could only spend 1 Bitcoin back here, 1 ounce of gold for 1 Bitcoin. Obviously, that seems like a much better deal. I understand. But the trend is the same. The trend continues. Power squared. Look at that, 95% R squared. It's a very good trend. But yeah, we are in historically very cool, weak ranges for the value of Bitcoin in terms of gold ounces. Very low. This is never going to happen again, but these could. Bitcoin's very cheap in terms of gold right now. Doesn't mean it can't stay cheap. Doesn't mean gold couldn't have a great run and go to $10,000 an ounce. I have no idea. But this is where we are. And also important to note that this is where we've been through all the prior bulls. Just like with dollars, we hit that 90% each time. Although, to be fair, 2021 was rough getting there. I mean, we did it for Feb to May, 3 months. Typical stuff, typical length with this stuff, but, barely. So it'll be very interesting to see if we have another bull in the dollar-based chart, how that will eventually, once it's all said and done, pan out with the gold-based chart for Bitcoin. I presume you're speaking about Bitcoin here. DD5. D-Defy. Yes, he is. I know of many people that have felt quite bad about Schiff's, attitude towards Bitcoin, because obviously he was, you know, my precision goes down to not less than zero with no decimals here, but these are quarter ounce of gold, less, zero point 0.1 ounce of gold here to buy a Bitcoin, extremely low amounts of gold. You just could have rotated in, 1% of your gold stack for Bitcoin here when Peter Schiff was poo-pooing it. And that would have been generational for most people. Yeah, some crazy personal thing. But I would say, John, DD is onto something here. Gold does not have a fixed supply, which is the cool thing about Bitcoin. It has a fixed supply, uncounterfeitable. The whole network verifies it. Transparent. You can immediately verify how many ounces of gold there are. And it's bearer like gold, but gold can be confiscated. I have no problem as gold as a hedge, say a hedge against Bitcoin, as it is a hedge against fiat, but I think Bitcoin is the superior hedge. So if we look at the trend line of gold itself, it's also nearly 100% R squared. So here's the full history of gold since 1971. 2.9 billion ounces. Today we have 7 billion. Growth rate, as you know, 1.7, 1.8% per year compounded. So it does grow in supply. John, don't tell us your hiding place. That's funny. What do you think, though? I mean, all these GATA guys who are the most hardcore conspiratorial, I'm not saying they're wrong, but they're the most hardcore, where is the gold? Where is the United States' gold? I'm bad with the names. One of those guys. One of those guys used to say, even with gold, the safest place to store your gold is not on Earth. Like maybe when we can get to Mars, because that's been the problem with gold is they can confiscate it. His name's Powell. You know him? I'm pretty sure it's Powell. Chris Powell. I really like listening to him. I think he has very insightful commentary on the gold market. Chris Powell from GATA. But I have heard him say unequivocally that, the safest place for your gold is not on Earth. Let me see if I can get a picture of him. Not great pictures of him. Here's a median. This is who I'm talking about. I'd like to interview this guy on the podcast even. I enjoy listening to him. He's hardcore. But it's hard. It's hard to take a lot of gold around. I spent last summer's conference circuit, which I don't have up yet. I need to put them up on Nostr actually as YouTube videos, not as YouTube videos, but as videos. I spent last summer's conference circuit talking about the challenges of gold in Europe during the Soviet and the Nazi invasions around the continent. And they're interesting, like treasure hunt stories, but There's also a lot of truth in it. Like the story of the Polish gold is unbelievable. How they had to move, you know, hundreds of millions of ounces from all around Poland, and they got it out through the Black Sea. They had to go through Romania by rail. They got it through the Black Sea. Then they went to Turkey in Istanbul. Then they went by train to basically Lebanon, Israel. Then they went out. It wasn't Israel at that point, right? It was French Levant. It was talking about, it was Lebanon. And then the ship went to the south of France. Then the Nazis invaded France, and the gold had to go down to Africa, to Senegal. It's pretty amazing. It's amazing stories, but it's also super risky, obviously. In these ships, you have the transport cost because the gold itself, I mean, you have the security, which is never known, but the gold itself during those really uncertain war times, there's just like a few families of the Polish central bank that are watching the gold. And of course, they have transport costs. They got to pay the captains of these ships. For a while, it was French ships, but before they got it over to France, it was like there was an American ship from Mobil, like Exxon Mobil, that took it through the Black Sea. It's just an amazing story how they got the gold out of Poland when the Nazis invaded, and the Soviets invaded, of course, 17 days later. Never forget about the evil Soviets. Thank you, Logie. Thank you. This is a top one. I come back to this a lot. So these are very strong. Let me take this off. All these indicators are like unbelievably strong. Like, in my opinion, better than looking at the 200-day moving average or whatever. Because Bitcoin is on this trend. It is on this trend. It's hard to sort of unsee it. And this is how the black line is now the all-time line I'm showing you. But the black line was growing faster at the beginning. So I'll take the black line away, and then you see this is how it sort of grew over time. But then notice from about here until the future, where you can see it projects out, it almost looks smooth. All right, see how it's almost smooth. It gets pulled up during bulls, gets pulled back down during bears, gets pulled up during bulls, gets pulled back down during bears. There's 6,000 days worth of data here. It's an incredibly strong chart. So I look at that a lot as far as just keeping myself sane. The other one is this headline chart: when Bitcoin will pass the value of gold, silver, and fiat-based money. 150 trillion, probably 15 years from now, or a little bit more. I don't know about the third chart yet. There's a lot of good ones, but I'm not sure what I would call my top third chart, especially in terms of Bitcoin. But for sure, I'd say those are the top two. I've heard this, yeah. I need to read this story. When did Romania have to give some of the gold during the Iron Curtain era? Because I know that Spain stupidly did during their civil war. Unbelievably dumb. Stalin was laughing at them that they sent the gold to Russia. You're never going to get that gold back. They did, of course, after all was said and done with the Soviet Union. They got, I think, most of it back. But the Baltics, we always kept our gold in London during that time when we were occupied. Poland had actually moved to the United States after World War II. I do not know the story about Romania, though. Oh, rough. I've mentioned this. I have a Swedish buddy who read an interesting Swedish book. I would love to read this in English, but talks about how Tsarist Russia well, when the Bolsheviks were overthrowing Tsarist Russia, and before the Bolsheviks sort of settled down into the Soviet Union, which was obviously founded in 1922, but even then it was, they were pretty violent, uh, overthrowing some of the Bolsheviks, right? Killing some of the Bolsheviks and sending Trotsky to exile because he was too radical for their view. All the revolutionaries, at some point, a revolutionary group will say, "All right, we're good enough. We're not radical enough. Sorry, we're not too radical, but we're also radical enough. So everybody else goes. We'll kill everybody else or send them into exile." And anyway, at that point, while this revolution was ongoing, from 1918 to 1922, they had no money. They had literally nothing. No industry. And Sweden laundered a lot of gold through Soviet Russia. They'd laundered a lot of these Fabergé eggs, all this stuff. Anything that could get some cash for the revolution, the Bolshevik Revolution, they provided. And then the world just goes on. It's this is why I really actually do believe in holding your keys and transferring the wealth and understanding there's a plan for your family. And multi-jurisdiction is very important. I mean, you never know. I mean, if there's a tumultuous time on the calendar, it certainly seems like now, 100 years on after World War I. But yeah, Sweden it was like 2 years where Sweden said, "Okay, you guys are too crazy, settle down." And then within like 2 years, Sweden was already trading with the Bolsheviks, laundering Tsarist gold. I don't know how that played into Romania. You say it remained there. It's interesting. I also find it's interesting, that the socialist revolutionary governments are the most secret. Although I guess Gatto would argue about how secure and safe the U.S. gold is, but at least for a while, they were publishing statements, and everybody sort of seemed to know where the U.S. gold was. But yeah, I think gold has been pretty co-opted by most governments. But they're buying more of it. They certainly are buying more of it at the moment. I think I have a central bank chart to show you. Hold on. This is one of the ones I want to keep improving. Not sure if this will pull up. Yeah, here's gold in central banks. It's my old stock to flow stuff. Ignore these. The trend is actually slightly down if you looked over the long term, because even in the 60s actually was the height of, this only goes to 71, but central bank gold topped out close to 1.2 billion ounces in the 60s, and now it's right back there. I think we're probably at a record. So this long-term trend, obviously it's not a good trend. It's down, new trend clearly from 2008. But yeah, since the GFC, since the Eurozone crisis, more and more gold into the coffers of central banks. We'll see how that plays out. All right, guys, I think it's going to be it for me this morning. Too many numbers, a couple other projects as well, work projects I need to do. But I have a lot of good charts in mind, just so you know. back to school, back to work. I am very interested in this fall, I think. If you ask me, don't count this cycle out until it's been invalidated. Everybody's saying it's going to be different this time. It's going to be different this time. Personally, I would say never say never. I'm happy. I mean, I would like to have a blow off top. If it doesn't happen, I'm not going to be sad about it. It might even be better for Bitcoin, healthier, but I'm not going to declare that as in until I think if Bitcoin stays under this 80 percentile, then it would be like, all right, it's definitely different this time. But we have easily cleared this orange ribbon every cycle. Every prior cycle, we've easily cleared it. Doesn't mean the top won't be lower this time. Maybe we don't even hit the 90. But I think we should at least hit the 80. Which is 150K, 160K by year end, 170K. And I think it's going to be more like 250. Thank you very much. Thank you, sir. My site is here. It's, basemoney.world, porkopolis.io, cryptovoices.com. You can get to it from many different ways. These graphs are not all up on here. Here's my site. Unfortunately, now we just have this one chart you can get here. We got the money supply data here, and so on and so forth. This is a wide, pulled my window wide, so it's actually pulling out a little bit here, but anyway. Would be happy for any donations. I'm keeping all this stuff free. No newsletter, no hype. You can donate Lightning, Bitcoin, on-chain, whatever you want. Yeah, I'm with you. I really think, again, for me, if it's not broken, don't fix it. It might break, but I don't see it breaking this point, even with all the Wall Street interest, even with all the paper Bitcoin. If anything, that to me is going to drive, once this selling exhausts from the 2011, 2012 crew, which a lot of them are selling at the moment into these prices. 100K was a massive psychological number for Bitcoin. So we're just dealing with that at the moment, in my opinion. All right, guys, that is it for me. Thank you, everybody, for the comments, for the chats. All the best. See you tomorrow.